Lisa, it's great to see you again. And let's just get right to that question. Who is most at risk from this shockingly large growth?
Well, most directly at risk, actually, and this might not be the first names that come to mind, are companies like Synchrony and Alliance Data Systems that provide the private label credit cards to retailers, those traditional cards where, you got a Saks card or a Bloomingdale's card, as mentioned in the prior segment, a Macy's card. And the most direct thing that Buy Now, Pay Later is substituting for is a really modern version of that kind of retailer-specific private label card. So they're probably the most directly at risk. Those players today have about 200 billion in volume in the United States. We're expecting Buy Now, Pay Later to grow to about 150 billion over these next few years. And most of that substitution would probably come out of that category.
For people who are less familiar than you and many are about Buy Now, Pay Later, how does it work, and how do the companies that offer Buy Now, Pay Later make their money?
So these are these specialized firms like Affirm or Afterpay or Klarna that you might be starting to see on retailer websites, where when you go to make a purchase, usually even on the product page where you see an item, you have this option to click on a button that says, do you want to pay for this in 4 interest-free installments? That's a Buy Now, Pay Later. PayPal offers it as well. Mm-hmm. And the way it works is that player, let's use Affirm as an example, does a real-time credit assessment of you and approves you for that sort of mini loan. It might be a $400 loan. Mm-hmm. And then they go ahead and pay the merchant. And then they turn around and then they sign you up for their app, and they ask you to load a debit card or some other form of payment. And then they collect those payments for you in, every biweekly installments for the next couple of months. And then the idea is they brought you into their ecosystem, and then they start feeding you targeted marketing, promotions, et cetera. So they're actually making their money primarily off of the retailers who are willing to pay a premium. Usually they're paying as much as 5 or 6% of the order value for these Buy Now, Pay Later buttons, because they have been demonstrated to increase average order value and increase conversion rates of consumers.
And to increase order value by quite a lot, Lisa, right? I mean, Courtney Reagan was reporting on this the other day, but there's some estimates that they might increase your typical or average order value by, 30 to 50%. These are enormous numbers. Why don't you think this is a bigger risk to the traditional card companies?
Because actually they use the card companies in many aspects of their business. The most obvious one being that when you go to repay those payments, those 4 installments, you usually use a debit card. It's 80 to 90% debit card. So the card guys are actually getting more transactions. These are revenue accretive to them because it's turning what was one transaction into, 4 or 5 transactions. And then in addition, they often use the card companies on the front end to pay the merchant and to expand their merchant acceptance to, they'll provide, once you're signed up for a company like Affirm or Afterpay, they'll often actually provide you with a digital version of a card that you can then use kind of at any merchant that takes Visa or MasterCard. It doesn't have to have that special button once you're signed up and on board. So the key point is they use the card networks actually in multiple places throughout their business.
Very quickly, did Square recently buy one of the players in this? And why wouldn't a MasterCard or a Visa, if this works, why wouldn't they come in and Bigfoot them and take them out?
Yeah, you're absolutely right. Square announced early in August the plan to buy Afterpay, which is the major Australian player. They're one of the top 3 players globally. And what Visa and MasterCard are doing, MasterCard just launched a product called MasterCard Installments. What they're providing is essentially a white label version. So their competitive response is they're providing a generic version of Buy Now, Pay Later that any of their card issuers or any of their sort of fintech partners can use. So as the consumer, what we should expect that we'll see is that we'll start to see all of our traditional banks, fintechs like a Chime or a SoFi, all start to offer this type of financing because MasterCard's offering it. Yeah.
Yeah.
All right, interesting change. The way we
It's
do business.
a big change, and that's huge.
But if the beauty of the credit card is you pay it all. You pay it off. I mean, those who do not pay immediately, you pay it off over a longer period of time. Here, you're being asked to pay in 4 installments. So
Right.
I buy a $400 Dyson